Good morning, traders, and welcome to the weekend update where I'm going to go ahead and review the current open positions and also take a look at, in this case, one position that was closed here this last week. And then we'll do a little bit of a market summary and talk about the game plan here for this next week. So the first trade I wanted to show here is this Apple trade that was closed. It was a put credit spread. This was only open for 3 days. It was about a 24% return, so that worked out very nicely. I should also mention those of you that are subscribers to the service, to the alert service, you can go into the closed archive circle and you can replay any of the closed trades that I've done over the past roughly year and a half. There's probably over 100 trades in there now. And you can go in and you can take a look at each individual trade, see the P&L on them. You can see all the videos that I did for when I opened the trade, adjusted the trade, and closed the trade. So great learning tool for those of you that are subscribers. If you're interested in finding out more about subscribing, I'll be sure to put a link in the description down below for you as well. So this particular trade closed out, nice profit. And then these are the trades that are currently open. So there's this broken wing butterfly that I added a call spread to when we were hitting all-time highs here the other day. So this trade is up about 5% at this point. This trade took some pressure to the upside as we went up and then eventually broke out after the Fed meeting here this last week. And, you know, it's in a good position. I do need the market to kind of stabilize here where it's at and decay a little bit, or even possibly pull back a little bit into this tent and decay. And we're going to look at, again, market expectations here shortly and what I might consider doing with this based on where I think the market might be going at this point. A similar story here with this diagonal spread. So just before the FOMC meeting, the market sold off considerably. One of these spreads was closed. I did have a GTC order waiting out there. In retrospect, it would have been nice to have closed all three of them, but I tend to enter my trades and I tend to phase out of them in pieces. So the FOMC meeting then rocketed the market up on Thursday and put a little pressure back into this trade. But once again, we're going to see where the market takes us this next week. My expectation is potentially a little bit of a pullback or stabilization, maybe settling back of the market. We'll see. If that does not happen, then I need to consider an alternate adjustment here. Then we have our wheel strategy. So this is a very interesting trade. I've now rolled my puts on FTNT on this wheel. I believe I've rolled them 5 times now, taking in premium each time. So I'm up to $1,300 in profit and still have not been assigned the underlying stock. Now, the premise behind this is that this is a stock that I would like to own at some point. But rather than just going out and buying the stock, I'm selling puts, taking in premium, waiting to essentially get assigned that stock. So right now, I'm selling 2 puts on this. So let's just say this were, for simplicity's sake, 1,400, which is probably what it's going to be by the end of this next week. It's going to be, yeah, right about 1,350 to 1,400. So I've picked up $7 per share in premium. So if I were to get assigned this stock at my $74 price, in other words, if FTNT were to drop to, $73, for example, and I get assigned the stock at $74, my actual cost basis is going to be $7 lower than that. So my cost basis is going to be around the 67 range, if you will, 66 range, somewhere in there will be my actual cost basis on this stock if I were to get assigned right now. Now, we're so far above that I'm now going to roll this again this next week. I'll have to look at a chart, but I'll likely roll those puts maybe up to the 75 range, something along those lines, probably pick up another $1 to $2 per share in premium, again, lowering my cost basis for once I finally get assigned this particular stock. So this is a technique that I'm trying to teach people in the community here, in the alert service, to understand if there's something that you want to own, there are ways you could potentially own it and get paid to own it by selling these puts as we go along. I've done some detailed videos on that for those that are interested. So that's the current positions right now. I will likely be looking to open a new position here this next week. I want to evaluate the market to see what type of position. It could potentially be a butterfly of some type. It may also be a calendar or diagonal spread of some type. Those are the two that kind of stand out to me right now as likely scenarios. And of course, anytime I go and open a trade, I provide a detailed, roughly 5-minute or so summary of the trade I'm opening, why I'm opening it, and why I'm opening it in the configuration that I am. And then I also get into a little bit of the potential management techniques that I might be using along the way. So let's take a look at our markets themselves. So looking at the SPX, as you can see, after that Fed announcement, which took place on Wednesday, we got a little bit of an initial sell-off. Then the next day, we popped up to all new highs in the S&P 500. And then on Friday, we actually pulled back a little bit. Now, I had marked this square here as a zone of resistance where I figured that the market might not break out of. Now, we did obviously break out of that a little bit on Wednesday, then again on Thursday, and we stayed above that on Friday. That is a bit of a bullish signal. However, look at this volume bar here. Let me just enlarge this a little bit. Look how high that volume was on Friday. That tells me that there's a chance that people are selling out of positions right now. They're thinning their bullish positions as we broke to that new high. Now, we're going to have to see if that continues or not. If people continue taking some money off the table, so to speak, or decreasing their risk, expecting that there might be a pullback here, we're then going to see more selling come Monday, and we may very well come back into this zone. So again, I like to put what I'll call odds or percentage chances on different things happening. I'd say that's probably about a 40% chance that we're going to fall back into this general zone, chop back and forth a little bit, and then move higher after that. Now, there's about a 40% chance that we may just take off from here and move higher right from here at this point. Maybe we come back, just touch the top of this, and move on from there. And then, of course, there's also a small chance that we come into this zone and we break out of that zone, in which case we might come down here to this 5,400 range. All of this would be normal and healthy for this market. If we broke beyond here and then came down into this zone, then we're still in a range of being healthy. But if we come out the bottom of this, below this 5,300 range or so, that then starts to get a little bit worrying as we're heading into the political environment that we're heading into here as we get closer and closer to an election. So that's the S&P and the possible scenarios I might look at there. Let's take a look at the Qs just to get an idea of the NASDAQ and what it is looking like. So the Qs have not made all new highs. This again is another reason why I have suspicions that the S&P might not just continue rocketing up from there, because the Qs are in this resistance area right here. This whole area right here is a bit of a resistance area. And we did not decisively break out above that. Now, RUT, similar, is hitting recent all-time highs. There had been prior highs higher than this back a year or so ago, but right now these are the recent highs, and it did pull back a little bit off of those. So the major indexes right now, they're holding up really well, but they are showing just a little bit of topside pressure on them that we need to see get resolved in RUT and in the Qs or the NASDAQ. And then from there, we have a chance of pushing higher. But for right now, again, My expectation on the SPX, the overall S&P 500, is a little bit of a chop sideways, possibly even a little bit of a pullback at this point, but nothing too threatening, so to speak. And we can also take a look at the VIX, the volatility index, and we can see that it's back here at lows. Again, not having any real fears in the market right now. And that's another reason why I'm not expecting us to, pull back significantly, and expected more to maybe chop a little bit sideways, possibly grind up a little bit. But again, my expectation is a little more kind of pulling back into that zone in the SPX and then chopping sideways a little bit before resuming to new highs. But we need to also have, again, the rut and the Qs need to participate in that move higher as well. So that is the weekend update here for Sunday, September 22nd. Thanks everyone for checking in on it. And again, those of you that might not be part of the alert service and are interested in knowing more, make sure you check out the link below. Take care, everyone.